One of the most common questions for pre-retirees is, should I move to a no-income tax state when I retire? The answer is more nuanced than you might think. Let's break it all down for 2026. Keeping 100% of your pension, 401k distributions, and Social Security sounds like a great idea. However, states still need to fund roads, schools, and services. If they aren't taxing your income, they're likely coming for your wallet through property or sales taxes, or higher costs of living. For the 2026 tax year, 9 states have zero broad-based state income tax. This roster includes Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. New Hampshire is finally fully tax-free. As of January 1st, 2025, the tax on interest and dividends was completely phased out. This makes New Hampshire a compelling, fully income tax-free option for New England retirees. Washington state has no traditional income tax, but it recently implemented a 7% capital gains tax on high earners. If your retirement involves selling a business or appreciated assets, run the numbers carefully to avoid a surprise tax bill. However, it remains attractive for most retirees. Florida is often the gold standard for retirees, offering zero income tax, meaning no state tax on pensions, 401k withdrawals, or Social Security income. It also has no estate or inheritance tax, and its Save Our Homes cap protects you from runaway property tax bills. Texas is the income tax solution. While 401k withdrawals are tax-free, Texas has some of the highest property taxes nationwide. This burden can wipe out the 0% income tax savings, making it surprisingly expensive on a fixed retirement income, unless you downsize aggressively. Florida and Texas both boast zero state income tax, but the fine print shows a difference. Florida's property tax protections offer a more predictable, budget-friendly choice for most retirees. Texas better rewards those who downsize aggressively. Tennessee is an underrated retirement sweet spot, with zero state income tax on all retirement income. It also offers reasonable property taxes, keeping housing costs predictable and a lower cost of living overall, making your dollars stretch further. Tennessee's trade-off is a high sales tax, approaching 10%. However, retirees typically spend more on largely untaxed healthcare and services, and less on goods where the sales tax hits hardest. For most retirees, the actual tax bite is smaller than the headline rate suggests. Wyoming is a wealth preservation fortress. It has zero income tax, exceptionally low property taxes, low sales taxes, and no estate tax. If you want the absolute lowest overall tax burden in the United States and don't mind cold winters, Wyoming deserves a serious look. This table compares the 9 no-income tax states based on income tax, property tax, and sales tax, providing a quick retiree-friendly rating. Florida and Wyoming are rated excellent, while Texas and Washington require caution due to high property or capital gains taxes. Be aware of the domicile audit trap. You cannot simply spend a few months in a tax-free state and claim residency. High-tax states like California, New York, and Illinois are aggressively pursuing domicile audits with powerful tools to catch non-compliant residents. State auditors look for various signs, including voter and vehicle registration. They may also check medical records to see which doctors or hospitals you use. Furthermore, auditors can subpoena cell tower and credit card records to count the exact days you spent in the high-tax state. To make a clean break, you must establish a new home by buying or signing a lease. Update IDs like your driver's license and voter ID. Switch your finances by moving accounts and advisors, and log your presence with a detailed travel and day log. Thorough and consistent documentation is critical to protect you from future back tax liability. A zero income tax can hide a dramatically higher overall cost of living. Always model the total annual cost, not just the income tax line, before deciding to relocate. Consider property and sales taxes and high-risk areas like Florida with surging homeowners insurance premiums. Before you relocate, model 5 key variables across your 10 to 20-year retirement horizon: state income tax savings, annual property tax burden, sales tax impact, healthcare costs, and estate planning implications for your heirs. Florida offers warmth, strong protections, and established infrastructure. Wyoming provides the lowest overall tax burden and ideal wealth preservation. Tennessee gives low taxes and affordable living. New Hampshire is now fully income tax-free for New England lovers. 9 states are zero income tax in 2026, with Florida and Wyoming leading the retiree-friendly pack. Texas can be an illusion due to high property taxes. Finally, domicile audits are real, So document your move thoroughly. Work with a tax professional to model the total cost of living in your target state, not just the income tax line. The right state depends on your unique financial picture, including income sources, home value, and spending habits.